Good evening. My name is Austin McKee, and oh my God. Here we go. This is my Investopedia I3 case study, and let's get right into it. See everything that I learned. So my overall results with my I3 case study was negative. I didn't make money. I actually lost money. I lost about $5,250, and that's all right. I got to learn some things, and I got to invest with money that I would have thought I'd never gonna have. So, looking into that, what I've learned overall is diversification. Extremely important. You've got to make sure you've got a portfolio that's not just one stock. You've got to make sure that things are well rounded. You can't just go into the market thinking that having the small amount of stocks is going to do you well. Having diversification so when things are down and up is very important. I also learned about time and patience. If you are jumpy, you try and get into a stock too early, you might lose money. If you try and get in too late, you might lose money, you might gain money. It's all about being conditioned, and that's what risk tolerance is all about. It made me realize, I already had a pretty good idea. I've been a little bit in the stock market, but it made me understand that sometimes things won't go your way, and you can't just panic and throw everything out the window and get rid of it, else you're going to lose a lot of money. Also learn about timing the market, which is very important. At least to myself personally, I'm younger. I can take on a bit more risk. In trying to get in at a really good spot in the stock can be very important for gaining a lot of money. Now, going to later, or to some of my experiences before, I've been in Fidelity in the stock market already. I have two accounts. I have a brokerage and I have a Roth IRA. And some of the things that I know is that I've already made some investments. I'm not too worried. I've had some experience with ETFs, and that's what I use a lot in Fidelity. And I've had success in Fidelity, and I've also had some failures. So things that I've learned from that before going in. But what my Investopedia idea is that I took two companies and I compared them pretty much apples to apples. So if we look at Lucid and we look at Tesla, they're both electric car companies. I wanted to compare the two on how they perform within this time frame that we were given in the stock market, and just kind of get this overall idea. Maybe not even the best, because it's a little less diversified because I've got two of the same companies, but companies always have different results. So it was something very interesting to see how one company is doing compared to another. So how the beginning went? Well, it went negative. As you look, I'm not very well diversified, and things were just going down poorly for me. Even as you see here, I've got a limit set on Starbucks. I understand limits, and I understood that you can time the market a bit better. If you see a negative day and you put in a limit, you might get that limit because the stock might hit a low price that day, and you might have set a specific goal in a certain range that you wanted. And setting limits is very important. You can get the lowest price into a stock that you may want. Now, a problem that I came across is that I don't understand the ETFs. And in the market, with Fidelity, they have their own personalized ETFs. And it was great to have those because they're simple, they're mixed of a bunch of different companies, and they're cheap. They don't cost very much, and there's not much fee for purchasing them. So I was used to Fidelity's ETFs and not the market ones. So I would have had to learn a lot more about them. And I think that was also a reason why I probably did pretty poorly on my ETF section on the market, because I truly didn't have as much information or much knowledge getting into ETFs in my portfolio. And here I just wanted to show that I had some positive returns. I was making some money. I think I reached a total of about $5,000, having a bit more diversified portfolio, and there was some good days. But sadly, 2 weeks later, I'm back to negative. It seems my portfolio is definitely a lot more diversified, and that's great. As we can see, I've got some banks in here. I've got some like Intel, I've got some computer companies, and I've got some phone companies as well. It's great to be diversified. But in conclusion, what I've mostly learned is that the market is not meant for the short term, and that if you're just going in for 2 months, you might have the worst 2 months of the stock market as we had here. We had just had so many problems with inflation, probably the war, our presidency, all these other kinds of things. It's not all great, and it can be really difficult if you're going to go in for the short term because you might not get returns that you want. I believe personally that the portfolio that I made in a couple months, it'll be a lot more positive. We'll be making a lot more money. I got in some really good prices, and overall, I was really happy with the I3 experience and what I got to learn about the stock market. Thank you.